Hey everyone, I'm Scott Cunningham, aka Scottsy Business, and today we're going to be talking about my investment portfolio and the updates that have happened in May, which really isn't a lot. So I'm going to be dedicating the majority of this video to actually talking about why did I invest in what I invested in? Why did I decide to invest in Ethereum, Bitcoin? Why did I go for growth crypto versus passive income earning cryptocurrencies via staking or whatnot? And why did I actually invest in dividend stocks versus growth stocks? And then the actual sectors that I chose as well. I've gotten a lot of people asking, why are you investing in what you're investing in? What made you make those choices originally? I don't know if I've ever gone through everything. I believe I have certain videos where I'm talking about I invest in use cases for crypto and, maybe talking about my stocks in one, but I'd like to dedicate the majority of this video to comprehensively breaking that down and just sharing some insights with you as to why I made those decisions. And then maybe that will help you make some of those similar decisions for yourself and decide how you want to invest and what your strategy will be. Mind you, though, none of this is financial advice. It's more entertainment, financial entertainment, if you will. And all the crypto-related data that you see and that I will show may or may not be simulated. With that being said, though, let's jump in after a quick word from my sponsor. A big thank you and shout out to my sponsor Cake Wallet, which is an open source, non-custodial Bitcoin and Monero wallet that also has a built-in exchange. It's available on iOS and Android. So I just wanted to start by doing what I normally do. We're going to cover all the updates in the past month, and then I will dive into my actual reasoning behind the investments that I made. So $821.48 of total dividends have been earned over the past couple of years. Last month, I earned $68.02, which is less than what I normally get, at least the past 2 months or so. But as you can see on the graph here, every quarter or so, every few months, I have a dip in my earnings, and that's really just based on what stocks are paying out when, etc. So that's not really a concern. As you can see on the graph, it's always generally trending upwards. It's always positive trending. So I have no complaints here, no concerns, and I expect next month to be potentially a record high month. So that'll be cool. In terms of crypto income, I earned $4.45 last month, which is very, very low, one of the lowest in a very, very long time. But as I've continued to reiterate, I believe that we're still in a very bullish time. So I'm still focused on growth cryptocurrencies and not so much passive income earning crypto. And I've really pulled out and continued to pull out. So you can see, how that's generally trended down from when I was earning the most, when I was getting $44 a month. But essentially none of this is like an anomaly or anything like that. This is what it should be, more or less. As I mentioned, not a lot has really happened in the last little while. My portfolio has been very stagnant, and that's okay because I still expect a huge rise coming very, very soon as we get closer to October, September-ish. That's still what I'm prepared for and what my belief is and that's what I'm investing based on that fact. So I still think we're in a pretty good opportunity to keep investing right now. And I always track these at the beginning of the month. So the next one I won't update until in the future. But again, I'm very, very close to this. I think I'm at 162 right now. So very little has changed. Mind you, it's only been 2 weeks or so. But again, because so little has changed, I wanted to dedicate the majority of this to just talking about why I invest rather than a bunch of changes that have happened. Again, same thing with the stocks. I saw a very, very small pullback only because I invested about 4,000 or 4,500 in Bitcoin ETFs. And of course, that has gone down with everything in crypto. So that has pulled back a little bit. But my dividend stocks are continuing to grow and pay out, and they're doing fantastic. My budget, I covered this in the last one, but again, my budget has been pretty normal. It's way higher than it should be, but that's really just because I bought a lot of different upgrades. I bought this camera. I bought a lot of different things this year. Most are actually tax deductible. So this won't really be an issue at the end of the year when I actually, well, not the end of the year, but next year come tax season. It won't really be an issue because I won't end up paying most of that in taxes because it'll all be deducted. So, I mean, that's one of the amazing benefits of having your own business or your own company, and then, being able to buy things that you want that are useful, but then they're considered a business expense. So upgrading my computer is great for gaming and many other things, but first and foremost, it's actually a business expense to help with video editing and things like that. So it's really great what you can do with a lot of your expenses once you start a business. I mean, there's so many other things that I don't know if I've really talked about, like how I can claim a portion of my rent, cell phone bill, internet, lots and lots of things is all tax deductible. And I just recently found out that all of my healthcare costs are actually tax deductible as well. Since, a lot of people get benefits here in Canada, but obviously if you're your own employer, you're not getting any benefits for healthcare. So then I get to tax deduct a lot of it. So it's really a win-win in that situation, whether it's in Canada or in the US or in most places. There's usually a lot of not widely known tax benefits to being self-employed or, actually having a business registered of some kind. Definitely worth looking into. But again, none of this is financial advice because I'm not qualified to give advice about your business or tax or anything like that. But yeah, let's jump into the actual total breakdown of my portfolio. So as you can see, 75% of my portfolio is growth crypto. But then I've also got some invested in Bitcoin ETFs for growth stocks. I've got my locked LBC that's still worth, like $6,000, but kind of disappointing that it's gone down so drastically from its high of like 40 cents or whatever, and now it's like 6 cents. Crypto dust is just tons of different crypto that I have across many different social media platforms. The most being DTC on DTube. It's always good to have crypto on a lot of these platforms to help boost your content or, do various things. So I do have a lot of that, and that's spread out very thin, but it makes up a small portion of the portfolio. And then I've got 1% in silver and gold, precious metal, and 14% in dividend stocks and ETFs. And that's all passive. So more or less 85% crypto, 15% in stocks. And the reason for that is, while I wholeheartedly believe in my dividend stocks and they've worked out very, very well, they've always been consistent, always performed really amazingly, it's going to take a lot longer. I still think I could retire in 10 years, no problem, if I just followed my 10-year plan for my dividend stocks and just compounding that interest. But I would like to try to do this in less than 10 years, if possible, right? If I do everything right with crypto, I could retire in just a few years. And possibly even this year, if everything plays out the way that I think it will in September, October time. But regardless, I have very, very high conviction for Bitcoin, Ethereum, and the cryptocurrencies that I invest in. And I have more faith in that than I do in the regular stock system. And that's really just because of one simple financial tool, and that is inflation. And my belief essentially is that as inflation gets worse and worse, and we're really realizing that now that money velocity is starting to pick back up as economies open up, I'm starting to see, crazy things like lumber, copper, raw materials skyrocketing. And as we realize inflation more and more in our actual consumer prices, everything skyrocketing, more people are going to realize the importance and the need for something like Bitcoin. While people will invest in gold as a defensive asset, it's just not good enough to do the things that you might want. Sending it across the world, bringing, a large amount with you across the world, because obviously you can't bring thousands of dollars of gold in your luggage. Many, many different things that Bitcoin sort of solves for what gold can't really do or does very ineffectively. And as inflation gets worse, I think it just becomes more and more obvious that solutions like Bitcoin are the answer. And specifically Bitcoin, because it has to be based around scarcity and mimic the qualities of gold. A lot of people compare Bitcoin to money, and then they say it's too slow, it's too this, it's too that. Bitcoin was originally trying to be like digital cash, but what it is today really is just digital gold. So making false comparisons isn't, really a reasonable thing to do. And you got to look at it for what it actually is today. And it mimics a lot of those qualities and improves upon them. And it's got the value. And a lot of people will say, oh, but it's robust. It's too old. It's getting outdated. I could say the same thing about gold. The only difference is that Bitcoin has improved a lot of those efficiencies or inefficiencies. And Bitcoin is the better version of that. And you could say, okay, well then why isn't Litecoin the upgraded version to that? Well, you can't just keep infinitely making new things. You've got gold, you've got Bitcoin. You can't infinitely make new defensive assets. Otherwise, it's not really going to work very well. And B, with something like Litecoin, Bitcoin Cash, digital cash, all of these things operate more so as a use case for digital cash because transaction speed, fees, a lot of different things, but they more so serve to be used as cash. You could hold them and hope that they go up in value, but in my opinion, it's just really unrealistic that something being treated as cash will have the scarcity and value as something that is treated as gold or any kind of precious metal. So it's really not the same. And that's why I think Bitcoin is so important. I'm sure there's other, solutions out there that people might care for to invest in instead. But we'll dive into exactly every single cryptocurrency. I guess since we're doing crypto right now, I'll just cover all of them and get through that. Since I'm only investing in a few, it's not hard to explain exactly why. I was investing in Hive and MTR, but that was kind of more of my passive crypto play. Plus, I needed some for the social platforms themselves. I got lucky and I sold MTR at the peak, and now it's actually less than what I bought it for originally. So very unfortunate for those holders. And then Hive, again, it wasn't as good as I'd like it to be. It's still very, very good for passive income. But in both cases, I wanted to just pull everything out and focus solely on growth crypto. Again, because of inflation and because of the Bitcoin halving cycle, which I didn't mention previously, but the Bitcoin halving cycle is just that every 4 years, Bitcoin's inflation rate halves. And that means half as much Bitcoin is being created from mining. So it just really puts a lot of pressure on the supply. And if there is still that demand, then naturally the price should go up because there's a lot less Bitcoin coming in to the markets. So naturally, every 4 years we enter a new cycle, and typically near the end of that cycle, we see a massive run up in price as presumably miners start to take profits, because miners have to hold to be able to recoup their losses once they start earning half as much. Because imagine you're making a bunch of money, and then unlike most jobs where you get a promotion, with Bitcoin miners, they get half as much Bitcoin every 4 years. So the only way for this to be viable is if Bitcoin is going up in price, or they're figuring something out to counteract for this. And this pretty much is always the case, as we've seen, and I believe it will continue to be the case for quite some time. But each halving is less impactful, so you do have to keep that in mind. Now, why do I invest in Ethereum when I could just, go against inflation and just go all out on Bitcoin? Well, Ethereum is more like programmable money, allowing you to do decentralized finance, create NFTs, lots and lots of different things. It's more so competing with there's a lot of different sectors that Ethereum dips into, right? Because it's competing with collectibles, it's competing with real estate in some cases, for like realty. There's so many different things that it's competing with, but the most obvious comparison is Ethereum against the stock market. And that's the most like simple comparison, or the easiest comparison you could make as to like what it's akin to when we're comparing Bitcoin to gold. And I mean, we're already starting to see with FTX markets that they are actually tokenizing stocks into cryptocurrency that you can invest in. So, you know, we're already saying that it's competing with the stock market, but now they're actually bringing the stock market onto Ethereum. So I really think that Ethereum has probably the biggest growth play out of everything, just because it has so much more to compete with and so much more things that it can do. And it offers so much. I mean, like with decentralized finance, we've got everything now, lending, you know, all these different things that you couldn't do in the past. And most of it is facilitated through Ethereum. There's other coins and stuff, and people have concerns over, you know, say Ethereum going to ETH 2.0 and gas fees. I'm not really concerned about that. I think in July, when we see the massive upgrade, it's going to be fantastic. And even if things take longer than we'd like, I still believe at the end of the day that Ethereum is going to be on top, and a lot of the ETH killers, quote unquote, are going to fall to the wayside because they're just not going to be necessary. And if Ethereum can still keep up and everything is good, then there's really just no reason for them. And that's what I'm investing in, essentially. And then for the rest of these coins, or actually before I get to that, Library coin is one of my most interesting coins because it's very speculative, and also partially just because like I want to have some Library coin to boost my content on Library and get more visibility. But yeah, I mean, I'm not really investing in it in hopes that it's going to do something crazy, but given there aren't huge complications with their SEC lawsuit, I could see this coin skyrocketing and going way up to its previous all-time high of like 42 cents, I believe it was, and then just like skyrocketing past that. And it's going to, we're going to see the craziest moves for Library, I would think, LBC. Just because if they continue to keep, you know, taking creators off of YouTube and other places where they're being demonetized or censored or deplatformed, and if that gets worse, it's just going to be better and better for Library and Library users, or / Odyssey. So I have a lot of confidence in that, even though it's really down right now. Given the SEC lawsuit works out in our favor, it will skyrocket after that. But leading up to that, it's very, very hard to tell. This could be a great buying opportunity, but you know, none of this is financial advice. And then for actually spending my cryptocurrency in a day-to-day basis, whether it was, you know, buying the equipment that I mentioned, my camera, my upgrades, I always buy this stuff with cryptocurrency that I earn typically, which is, you know, really cool to be able to do that. And I want to actually, you know, take what I've earned and invest it back into the show / channel itself. And Dash, Bitcoin Cash, and Litecoin are easily some of the best contenders. Dash is probably the best, and that's why I hold the most. But it doesn't hurt to have a couple extras in case I'm on a website that doesn't accept Dash, or, you know, whatever it happens to be. Because, for example, Bitcoin Well, where I pay my bills, only accepts Bitcoin, Bitcoin Cash, Litecoin, and Ethereum, and not Dash. So I have to resort to using Bitcoin Cash in that situation. But for the most part, I use Dash. And anyone who's going to comment and say, well, why don't you use Doge? Well, those people are kind of ignorant to the fact that Doge transaction fees are actually exponentially higher than these three. And anyone who's saying Doge is a currency for replacing digital cash is kind of just writing off of all that hype. And they really just want it to go, you know, 100x so that they can make a bunch of money. Not because it's actually viable for being used as currency, which again is its only use case, because there is no other use case for Doge. that's why I'm really not for Doge at all. And that kind of explains the reasoning behind why I've invested in these cryptocurrencies. And again, a lot of times I'm just taking earnings that I earn on social and then converting it into these cryptocurrencies and just kind of building my portfolio up slowly. Plus, I typically tend to invest a good chunk of my income at the end of every month. But in terms of Dash and Bitcoin Cash and Litecoin, a lot of that is just used for day-to-day spending, whether it's paying for my grocery bills or buying beer or, just anything. I try to spend about half of my expenses in crypto so that as I earn crypto, I can spend that. While it might make more sense to just hold it since I believe it's going way up, I want to realize and really practice and live that lifestyle where I'm spending crypto, living off crypto, earning crypto, to eventually maybe go one day where I can do 100% crypto and just go from there. And that's kind of the aim anyways. So that's everything for crypto. I talked about why I'm doing growth versus passive again for crypto, and I'll reiterate real quick. It's just because of inflation and all that stuff that it makes more sense right now near the end of this halving cycle to just be focused on bullish cryptocurrencies, because this is where, we're in alt season right now where the most volatility happens. This is where the most growth will happen as well. So it doesn't make sense to be focused on staking or lending or something right now. While you can still do really well with that, it's much more feasible to do that during a time where everything's very bearish and you're just focused on building up your passive income during that time, which I will do from 2022 to 2025 probably, and maybe to 2026, but somewhere in that cycle, I will switch again like I'm doing now to growth as well, and then spend the majority of that 4-year cycle doing passive income. So that covers everything for crypto. When we take a look at my stocks, this is the breakdown of the different sectors that I invest in. And I think a lot of the quality stocks in these sectors are going to be good, as long as you just choose, reasonable stocks. Some of the things that I always look at when I'm picking a stock are, what's the dividend yield? Because if it's really high, it's probably too risky. And if it's really low, it's not so much a dividend stock. It's more so a growth stock that offers a tiny dividend. Like a lot of really well-established companies only offer like a 1% yield, but I'm aiming for 5% because once you have enough money in your account, 5% is a very good spot to be in terms of just having a reliable income. So for example, if I can get my account to about $800,000 or so, I will have way more than enough money coming in from 5% passive yield coming in to just cover all of my expenses and still have way more money left over. So I'm generally aiming for 5%. Just because it's a good number to aim for, because again, 10 is way too high, 1 is way too low, 5 is a very good in between, and that's generally what I aim for. So you can get that with a lot of these stocks, right? Again, the better stocks typically will offer a lower yield, but it depends on the sector. You can get higher yields in real estate, but you'll get less for residential and more for commercial, but commercial is more risky right now, especially with COVID. With banking, you get somewhere in between. Utilities tend to be a lot higher. Insurance tends to be a little bit safer. And then for ETFs, I kind of aimed for right around 5. So it all comes pretty close to being what I was aiming at. As you can see, the average right here is 4.99% yield, meaning that I'm more or less exactly where I'm trying to be with my yield. I probably still have too many stocks. As you can see, I've got 31 with a decent portion of them being ETFs. So I'm not super concerned about watching my ETFs and keeping up with them a lot because that's kind of their job. What I keep up with is my own individual stocks to ensure that I'm updating the dividend yields, because everything here is automatic, which is really nice, except for the dividend yields, which I do have to update every month or so to ensure that I am getting the yields that I'm aiming for. And what I will do is, if something, drops drastically, I'll typically just sell off that stock and switch into one of my other stocks that is offering what I want. Because again, all of these I've done tons of research on. I made sure they had a good PE ratio, good yield, consistently paying out their dividends, rarely ever pulling back. And if they do pull back, they always go back to normal, things like that. Done all my research to make sure that these were good before I went in. And now it's just topping them up and adding to them as I go. And, just putting money in every month. I haven't been investing much in my dividend stocks lately because I've just been going all out on crypto. But I do want to max out my TFSA. That's very beneficial to do so in Canada, and there's no reason why you should ever not do that. So I highly recommend doing that and maxing out your TFSA, or if you're in any country that offers some sort of account that allows you to max out the amount of contributions you make that give you tax benefits. Again, my TFSA is a tax-free savings account, meaning that for the limited amount of money that they let you put in, everything that you make in there is tax-free. So it's just free money, and you don't have to worry anything about the taxation or anything like that. So there's a lot of benefit to maxing that out, and you definitely should. But again, why did I choose these sectors? Banking, insurance, are definitely the safest sectors. Because you're always going to need banking and everyone has to pay insurance no matter what. So these are very, very safe. Their PE ratios are ridiculously low, which is what you want. A PE ratio is just your payout to earnings ratio. And all that really means is how much are they actually earning based on what the stock is worth. So if their stock is worth a certain amount and they're earning a really good amount and it's similar to the valuation, they will have a low PE ratio. But say you're Tesla and you're earning almost no money and most of your income comes from government subsidies, and your stock is insanely highly valued, their PE ratio is one of the highest I've ever seen. It's like over 500, whereas like my insurance stocks and bank stocks are like 5 or 6 or 3 in some cases. So, very, very notable difference there. Anything with a really high PE ratio is very, very risky, and it's all about growth. And the lower PE ratios tend to be very, very safe stocks like banking, insurance, things like that. Real estate and utilities are a little bit higher on the PE ratio, but still pretty safe as well. I went all into residential real estate because commercial is just so risky right now with COVID, especially in Canada, everything being closed down, locked down. So I only wanted to invest in residential. And while a lot of people can't pay rent as well, I still think residential real estate is very, very valuable. And while there could be bumps and stuff like that, I'm still very, very confident in it. As well as utilities, because everyone needs to pay their utilities and everyone needs utilities. I'm very confident in that as well. And utilities tend to pay a higher dividend, so that's also really nice. But everything is tracking along very well. It's all been very safe. And if there ever is any issues or news or whatever, I can just move around as I need to within these stocks, because most of them, if not all of them, are very, very, very quality. So I have no issues with moving between them as needed to achieve the average yield that I'm aiming for. So I hope that explains the kind of breakdown of these stocks and why I aim to do that. Essentially, I was trying to put 1/4 of all of my money into just general ETFs, let that money, work on its own and do its own thing. And then I was going to kind of break up the major portions of my investing into real estate, banking, and insurance, with a slightly smaller investment into utilities, because these are kind of my main three. And then I started to get more into utilities, seeing that was another really safe sector. I really try to keep things as safe and consistent and just very, very conservative when I'm investing in stocks, and I keep everything to dividends and just building that portfolio up really safely, really assuredly, just compounding interest and building that up. So that's been my focus there for quite some time with dividend stocks, and that's what I will keep doing. That I think covers everything for all the investments that I've been making and all the stuff that I've been focused on. I hope this gives you a better idea of why I'm focused on stocks versus crypto, or crypto versus stocks, and then passive versus non-passive. If I didn't actually mention for stocks, the reason I've mainly gone into dividend paying stocks instead of growth stocks, it's pretty simple actually. The reason that I mainly focus on dividend stocks instead of growth stocks is because dividend stocks allow me to compound interest. All of the money that is paid out to me in dividends, I reinvest directly into buying more stocks, and over time that is more and more and more, and then you can exponentially buy more and more and more and just keep building up the portfolio that way. And with that, I'm not really good at growth stock investing. I do sometimes invest in growth stocks. I have done well. I have messed up before. But for the most part, the safest way that I've ever invested that's always yielded me great returns has been dividends. And I'm just really focused on building that up so that I can pay off all of my expenses. And while I could do that by investing in really good growth stocks and then pulling out and investing in dividends, I'd rather just learn everything now and have the right dividend stocks all set up as I go into the future and know what to look for and what to invest in, rather than practicing all of my time investing in growth stocks and then trying to figure out dividends later on once I've amassed my wealth. And again, as you build your compounding interest, it will just keep exponentially getting more and more and more. And it's really great to see those milestones get hit when, like I see that my cell phone bill and my utilities can now be covered by my passive dividends that I'm earning. It's really ideal to see that and to have those milestones being hit. Whereas with growth stocks, a stock tanks and goes way down in value. That just sucks, and it just doesn't feel good, and it's just a bad time. Whereas if my dividend stocks go down in value, I just see that as a buying opportunity where I can get more stocks that then pay me more in the future, because I know that my dividend stocks are good stocks. The problem with growth stocks is if I'm speculating and I'm hoping something's going to do well, if it doesn't do well, I don't actually know that it's going to come back and do much better in the future. So when a growth stock dips, I'm not as inclined to be buying a bunch more. Maybe it's just because I don't have high conviction in a lot of the growth stocks that I see, and I just don't like playing that game. It's much more gambling-esque from a lot of what I see in that side of things. Most people are, buying random stocks, penny stock investing, tons of risky stuff. But when it comes to investing in dividend stocks, people tend to be a lot more careful. And a lot of the stocks that actually do offer dividends are very safe stocks, like banks, insurance companies, things like that. So naturally, I gravitated to the safe stuff for stocks and the risky stuff for crypto. Although, ironically now, investing in things like what I invested in crypto is seen as being conservative, and most people are investing in random altcoins and all these crazy things that they think are going to 100x, when realistically most of those are going to make people lose money. So I've been focused on gaining money and building up my passive income, but I'm curious, what are you guys doing? What crypto are you investing in? What stocks are you investing in? How do you make those decisions? What is your reasoning and strategy behind your investments? I'd love to hear all of that from you. And if you did watch this video to the very end, I really appreciate it. Make sure to comment #1ham in the comments below if you did, and give this video a like and subscribe. Anyways, thank you so much for watching. I'm Scott Cunningham, aka Scottsy Business, signing off. Cheers.